All right. I want to spend just a minute with you going through this, what we call the OTG money management spreadsheet. Essentially, what this spreadsheet is designed to do is to give you an idea of how keeping your losses low and letting your winners run allow you to be profitable over the long term. So here's the basic functionality of this spreadsheet. You have an initial equity. You can change this to whatever you want. In fact, you could come back here and change this initial equity to whatever amount you wanted it to be. In this case, we're going to use $10,000. We're going to say we want to run 100 trades through it, and we're only going to risk 2% of our account on any one trade. Now, on the spreadsheet, you can change it and make these variables any ones that you want. But essentially, for this demonstration, I'm going to do these numbers here. We're gonna say $10 to account for slippage and commission. All right. So you come over here to this spreadsheet. What you're looking at over here, this is the historical trade distribution. So right now, what I'm saying is, out of that 100 trades, 35% of them is going to average a 2.35 win to loss percentage, meaning that for every dollar I lose, I'm going to win 2.35% more than that. And there are going to be 49% of my trades are going to be losers, and 16% of my trades are going to be break even or just right at the break even mark. So only 35% winners here, right? So I'm going to show you something here. I'm going to pull this spreadsheet over, and this is the historic, since we've started this all in, since we've started this scaling in all out philosophy here, the average winning trade is 6.17. The average losing trade is 204.76. Sorry, 617.92 and 204.76. That's at 3.01% times greater than your average losing trade. Now, we're only winning here 32% versus 55 and 13. So let's go ahead and put these numbers as they are happening here in this spreadsheet. So again, we said that we are winning at a 3.01% times, and the average number of winning trades is 32%. The average number of losing trades, the average percentage of losing trades is 55%, and the average number of break-even trades at this point is at 10%. Okay, so that's going to give you, let's see here, 32. It's actually, the numbers are a little bit, sorry, that's not 10%, that's 13%. Here you go. It's 10 trades and 13%. So let's move this to 13%, and let's see what the spreadsheet's telling us. So since the 10th of August, when we rolled this out, this has been the trade distribution. We're winning 32% of the time, 55% of the time we're losing, 13% of the time we're break even, and when we're winning 3.01% more times more than we are losing. So what this spreadsheet does, I'm going to hit reset. That's with all of these new numbers in it. And I'm going to come over here and I'm going to hit start. And what this is going to do is, it says your position size is risking $200. That's what we do here. Basically in the room today, we're risking $200 per trade. That's 2% on a $10,000 account. And when I hit run all trials, it's going to randomize the wins and losses here. It's going to throw them in no particular order. It's going to randomly distribute them based on these numbers that I've placed in over here. So we're going to start here by running all trials. All right, so the first run through this, it says you profited $12,995. You won 34%. You actually had a 32% win ratio, so it was just a slight bit higher than what was expected from your win-loss percentage. But then basically your profit for that month would have been $12,195. Now here's the random trade distribution here. What you can see here, and this is interesting, right? Let's take a look here, by the way. Your max drawdown here would have been 15.7% would have been your max drawdown here. Now, again, look at the trade distribution here. 1, 2, 3, 4, 5, 6, 7 trades in a row were losses or slightly break-even trades. All right, so if you continue to run through here, there's 1, 2, 3, 4, 5, 6, 7, 8, 9 trades at a loss or break-even. And so you can see you go through some pretty long runs here of losing trades. But in the end, you ended up being okay because you cut your losers short and you let your winners run. So we're going to reset this spreadsheet, and we're going to hit start again. And we're going to run another random set of 100 trials. So these are not in any particular order. They're just being randomly run based on the information that we put in over here. This time, your win percentage was 35% versus 32% is what you're showing. So again, it's randomly throwing it into the spreadsheet. Your max drawdown in this case was, you hit a max drawdown of 33% here, right? And so look at this string right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. You had one winning trade, 21, 22, two winning trades. So that's 22 of 24, 25, 26, 27, 28, 29, 30, 31, 32. That is a string of 30 losing trades and 2 winning trades. Yet, because you cut those losses short, you were able to run this up to a profit of $12,602. Again, telling you and showing you randomly, these are random trade distributions, how you can be successful with doing it this way. We're going to do it one more time here. We're going to hit reset. We're going to start. We're going to run all the trials again one more time. And so as you run through these trials here, you'll see, again, this time the profit was $9,700, and it was more in line, 33% win ratio versus 32% win ratio, and your drawdown here was 13.2%. Look at this string here, right? You had a long string of in the negative, but you still ended up profitable to the tune of $9,700. And again, that's all because you were letting your winners run while you're cutting your losers short. So again, hopefully this makes a lot of sense to you, and we'll catch you next time. And as always, thanks for watching our videos.